What's going on, guys? How are you doing? I hope you had a very good weekend and looking forward to a very peaceful week. So this week we'll be sharing a lot of videos, a lot of content. So be sure to be on time and stay tuned. So today we are going to be talking about the H1 strategy that you should be knowing. The H1 strategy that is very easy, very simple, and can be used on any time frame. But today we are going to use the H1, and to really understand how this powerful strategy works, we are going to be using the GU chart first. Then we see what we have as we go forward. So this is this projection you see here. In case you didn't know, this is a sell projection which we did on the weekend and sent in our Telegram group. And if you are not in that group, find the link in the description down below, and all the links are in the description down below, and you can be joining and taking advantage of these projections which are sent every week. So that's that, guys. So I'm just here to show you quickly this H1 strategy, which uses order blocks and market structure. Yeah, you guessed that right. Exactly right. So this is how we are going to do it. Number one, you will need a directional bias, or you will need a bias on how you determine or you predict the next move in the market. That's what you will need first before you enter trades, before you know how to enter, how to identify everything which we are going to be talking about in this video. So number one, you need a directional bias in this, or you need to know where the chart is likely to go, where price is likely to head to next, and we are going to be using market structure for that. Bear in mind, we can also use any concept to identify the directional bias, but I like order flow and I like my market structure. So that's what we are going to be using here. So guys, let's say the market is trending up. So we start from here. Let's say the market is trending up like this. So when the market is trending up, by now you know that we will be breaking what? We'll be breaking highs as we go up. We'll be breaking highs as we go up, as the market is trending what? Upwards. So what we do is, in an uptrend, we are going to look for our order blocks. This is just H1. You are not going to higher time frame, you are not going to lower time frame, you are just going to use the H1 time frame. So what we are going to be doing here is we are going to use market structure for direction and order blocks as our entry zones, or as our demand and supply zones. So look in this area where we are having these order blocks, So what you need is mark out your order blocks. So let's mark out this order block right here. So that's our order block there. After we have, this is a stop hand, this is a stop hand, this pin, a stop hand. After the stop hand, we are having what? A break of structure, and after this break of structure, we are having this order block. So this strategy is a combination of market structure and order blocks and the H1 time frame. So what you need is, you need price to come back to the order block, which we call RTO, return to order block. You need that. So after RTO, you are going to look for a confirmation in your direction, right? So the confirmation we are going to be using here is, when price gets to your order block like this, you are going to wait for the confirmation candle in the direction which you want to go. Let's say you want to sell, like in this case, this is our order block, and you want to sell from this. You are going to wait for this red candlestick and sell at the candle close. As I said, this is the H1 time frame, and that's what we are going to be using. And if you measure your entry, your stop loss is going to be maximum of 20 pips. So you are going to use a maximum of 20 pips. If your order block is too big, just use 20 pips. And or you can wait for price to retrace to 50% of the confirmation candle. So you can enter here, and if you enter here, you are going to use 15 pip stop loss. So this is how we are going to be doing it, and you are going to go for minimum 1 in 3, which means if you use 15 stop loss, you are going to go for 45 pips on H1. That is very achievable, and if you miss, or if you can't enter this candlestick after it closes here, if you can't enter here because it's too big or the zone is too big, your risk is going to be too big, you are going to wait for the 50%, or you can just use a pending order at the 50% of the candle. And please note, you are only going to be using the body of the confirmation candle to calculate your 50%, and that's that. And 15% max, and look at how price moved. Let's say we enter here 45 pips or something like here. It's 1, 2, 3, 3.5 hours of holding, and you are out. So this is how you are going to be doing it. So you are not going to wait for candlestick patterns. You are not going to wait for candlestick confirmation candles which you read those pins, or you are just going to wait for a red candle for you to enter sell, and you are just going to wait for a blue candle for you to enter buy. I hope you understand what I'm trying to get across to you guys. So let's look in this area. What has happened here? What has happened is price has taken out, obviously, this one, break of structure, and has left this order block right here. Okay, sorry. And price has left this order block right here. So this is the order block which we are considering, and we cannot take this first impulse. Why? Because the impulse is too aggressive. We're going to wait for maybe the second one. And if you enter here after this red candle prints, your stop loss is going to be 10 pips, and you are going to go for 20 pips. So you are out around here. You see? So this is how you are going to be trading using this strategy. You are going to use a 1 in 3 risk to reward ratio, and you are going to use H1 order blocks, and you are going to use H1 market structure. And yeah, that's the 3 rules you are going to see. So first of all, market structure. Second, you are going to use order blocks. And let's look at another example. Break of structure here. This is your order block. Price goes, shoots, and stop 100 beyond the order block right here. And what are you waiting for? You are waiting for the confirmation candle. This is too big, so what are you going to do? You are going to put your pending order at the 50% level of the order block, and price will tap you in right here. So this is what is going to happen. This is 15 pips, and you are going to look for 45 pips somewhere around here. So that's 45 pips for you, and you are out. So this is how you are going to do it. Break of structure here. What's next? You are going to measure you are going to identify your order block. What happens after that? You are going to see that this is too big, and we are not going to enter this kind of a trade. That's a pass. This one is too nice. Break of structure, right? Price breaks that. Price comes back to retest, and you are not going to enter here. Why? Because this is midnight. This is 00 midnight. Remember the concept of time. You have to understand the timing of your trades. So you are going to enter here. Why? Because this is around London open. So this will be your trade. This will be your trade. This will be your sell. And if you enter here, your stop loss is going to be 15 pips, and you are going to go for 45 pips, and you will be out just like that. So let's look at another pair. This is USDCHF. Break of structure, price comes back to the order block. This order block retests. So as you can see, this is an institutional number. So this is an institutional number in 92,500. So that's another confluence which you can be using together with your order blocks. So look at what price did. Price threw this big red candle. So what are you going to do? You are not going to enter that. You are obviously not going to enter that trade. Why? Because you can't be risking 41 pips. And when it retraces to the 50% of the candle right here, obviously you can't risk 30 pips too. So we can agree you are going to miss that one. So this one order block, price throws the confirmation right here, and 15 pips top loss, and you are going for 45. 1 in 3 H1, only that is going to you are going to see wonders with that. So break of structure is here. Break of structure, it actually took out the 91,250 level, the 250 quarter point. So after that, price retraces back to the order block. So what are you going to wait for? You are going to wait for price to what, to get into the order block and go away. So this would have been your trade entry, and your stop loss is 20 pips. That's very bad. So you need to go for 60 pips, and you are out. So guys, this is how you'll be going. So look for very good and beautiful order blocks. Look for beautiful order blocks, and you will be good to go. So this would have been your entry right here, and the stop loss is just 13 pips. So you are going for 39 pips. Take profit 1 in 3, and you will be good to go. And you will be entering at most two trades per day at most. And at the end of the week, let's say you get 3 trades right, you're going to be 99% up, and you get 2 wrong, you're going to be 2% down. 9 minus 2, that's 7%. For the week, for the month, you're 7 times 4, that's 28%. That's huge. That's impressive. So yeah, that's that, guys. For this, let's look at gold. Let's look at gold. A lot of you guys ask me if this can be applied to gold, Nasdaq, Dow Jones. Yes, it can be applied to those pairs, and I'm just going to show you how we could have traded this gold. This is the order block. Break of structure is here, order block is here, and price retest, and this is the confirmation candle you want to see. This is the confirmation candle you want to see. You buy here. So this is what gold. So gold is points, right? So this is 71 points, and you are going to go for 71 times 3 points, right? That's that. Order block, aggressive move, takes out structure, and this is your trade. So after the close of the red candle, that's your confirmation. Stop loss 37 points, and you are going to go for 37 times 3 points. So you see why I wrote no trade here. So this is a very good order block. Why? It took out structure, very beautiful move, and very beautiful price action back to the what? Back to the order block. But what happened is this pin, the blue confirmation candle, as I said, we want to end after the confirmation of the blue candle, or after the close of the candle, which is the confirmation candle. So this pin is the confirmation candle, and if you enter here, the stop loss is going to be below the order block. That's 139 points. You can't risk that much, so that's why we say no trade unless you are using a what, a pending order. But we cannot use a pending order in this case. Why? Because we want to see the confirmation first. So that's that.